Natural gas prices hit a 30-year low recently before rebounding. So we're going to take a look at the fundamentals of the natural gas market today, as well as have a look at the technicals to get a sense of whether this move is the sign of a recovery or perhaps merely a dead cat bounce. But before we do that, make sure you like this video, subscribe to our channel, and place a comment below the video. We'll be sure to get back to you. Give us your view on natural gas and what you think the outlook it is for its price. Natural gas prices have been very volatile over the last few years, pushed higher by very strong demand in the post-pandemic period, as well as supply shocks related to Russia's invasion of Ukraine, but then also pulled down by the response from European powers to reduce dependence on Russian gas, the reemergence of the US natural gas industry, at least in part, as well as unseasonably warm weather over the last couple of years, especially in the Northern Hemisphere. So let's talk about now the recent sell-off we've seen in natural gas prices that have pushed prices to around 30-year lows. And the catalyst for the leg lower lately was a decision by the Biden-Harris administration to reduce exports of natural gas to some US trading partners, in fact, ban them entirely. So what's the function of this? Well, effectively, what the administration has done is reduced or eliminated effectively several key export partners that would demand natural gas from the United States and said, well, you can't buy this from us. The effect of that is there's more natural gas to go around to the other export partners, which effectively means that demand has dropped, the supply is the same for US natural gas, and prices in the United States have fallen. Why is the Biden administration doing this? Well, it's effectively a part of the administration's climate change agenda and shift away from fossil fuels to renewables, an effort to try and wean the economy, not just in the United States, but globally, off some of those quote unquote dirtier forms of energy. So that's what's really driven that dynamic of much weaker prices in global markets. But of course, there are bigger picture stories at play here. And we'll take a look at a couple of charts now that illustrate some of the fundamentals of the natural gas market. Now, of course, there are several things going on from both the supply and demand side that are driving the market for natural gas at the moment. But let's just home in on a couple of key factors, especially those that have been relevant over the last few months and have driven prices to their recent lows. Now, one of those things is unseasonably warm weather in the Northern Hemisphere, in Europe in particular, but over the last few weeks as well, the United States, much warmer weather in winter than what is typical. And the knock-on effect of that, of course, is that people are using less heating and therefore demanding less natural gas. Now, this picture gives you a little bit of a sense of the very warm weathers that we've seen in January across the globe, but this does apply to the Northern Hemisphere in particular, of course, which is global land and ocean temperatures and the January temperature anomaly, which is effectively the difference in the temperature over every month of January going back around 170, 180 years or so, using as a baseline the average over the 20th century. And what we can see here is over the course of January, temperatures were far and above their average over the 20th century in the month of January just gone, illustrating again that kind of warmth across the globe, driven probably by climate change and the subsequent lower demand for natural gas as people simply don't need as much heating as they would have in the past. Now, that's somewhat of a demand side story there. This is the supply side story, and we have spoken in previous videos about this one, which is European storage levels remain very, very high, and it speaks to the success that Europe has had in diversifying its energy supply chains away from Russia because of the impacts of the Russian invasion on Ukraine and clearly the energy insecurity the continent had faced, and sourcing natural gas from places like Norway and then, of course, the United States in particular, and being able to build storage levels up to, well, very, very high levels indeed. Now, this is comparing the last 5 years or so of natural gas levels over the course of the calendar year versus what is capacity. And you can see in that blue line on your screen there, which is obviously incomplete and has only reached around February of this year. that we're tracking above the storage levels are tracking above any time over the last 5 years or so. So storage remains very, very ample. The risk of supply shocks remains very, very, very low. And this is happening at a time in which demand is also weak, again, because of those seasonal factors or those unusually warm weather in the United States and in Europe. Now, finally, this just really tells the story about what the markets are discounting. And this is the March and April spread in terms of natural gas futures. And this is just telling us that the market has gone into contango and anticipating a short-term period of oversupply. So effectively what we are seeing here is that producers have produced too much for the market to be able to absorb, and that needs to clear somewhat before we start seeing upward pressure perhaps emerging on prices again, and supply and demand coming to closer equilibrium. This obviously depends on a number of factors, and mostly it's going to be on the production side, more than likely, given the fact that we're coming out of that seasonal period in which, in principle, there should be higher seasonal demand. But it just goes to show you, again, the several supply and demand factors manifesting in what is a excess supply in the market for natural gas. So here are the technicals for natural gas. And before we actually look at some of the indicators and analyze the chart, just bring your attention to that arrow on your screen there, which is effectively where the Biden administration's announcement about export curbs was announced, and clearly indicates where the recent sell-off began for natural gas. Now, zooming out again to the technicals here, and you can see that we've seen a little bit of a jump off recent lows, those 30-year lows that we've been talking about. The price becoming extraordinarily oversold. And you can see that on the daily RSI, falling very, very close to that 20 mark or so. A little bit of a reversion now to the 20-day moving average, which is acting as somewhat of a resistance level. A break through there might be an indicator of ongoing buying pressure and upward momentum. We also have seen, of course, a bit of a breakout from downward sloping trend line resistance. But overall, things looking very, very weak from a structural point of view for natural gas. What do we potentially need to see from a technical standpoint to perhaps indicate there is growing bullishness in the market, or at least a greater reversal at play? Well, of course, that 20-day moving average needs to break, and the next key level to watch there is $2 on the beyond that $2.20. A break of one or both of those levels would be a significant indicator that maybe the market is starting to turn around. In the meantime, and again with a trend skew to the downside, that $1.60 level, which was where those 30-year lows happened to be, and we started to see some buying support coming through for natural gas, would be a very, very key level of support. A break below would be a very bearish signal, and perhaps would suggest that the downtrend is going to continue, and that this move is indeed something of a dead cat bounce. So those are the factors driving natural gas at the moment, and the imbalance between supply and demand driving prices to 30-year lows. The charts are delivering a fairly resounding signal that natural gas is in a downtrend, but keep an eye on some of those key levels to try and determine whether we are seeing an unfolding reversal at play in natural gas right now, or perhaps whether this is just a dead cat bounce and that we can expect the downtrend in the commodity to continue.